What's up, guys? It's your boy, Quick Stocks. As always, remember to hit those thumbs to recharge my dopamine. Oh, we're really gonna need it in this one. And we will get right into your quick stock analysis of Tesla, ticker symbol TSLA, trading for $392 a share as of September 6th, 2020, equating to a market cap of $389 billion and a pretty crazy PE of well over 1,000. It's been a crazy ride for Tesla investors. Days after doing a 5-to-1 split last week, Tesla went on an absolute tear, but it seems as if the rubber is beginning to wear as the company starts on a downward trajectory. For those not yet used to the split pricing, $392 a share equals $1,960 pre-split. However, I don't think too many Tesla longs are too shook up, as the company is still up a whopping 800% in the last year alone. So what's the move? Are we revving up with Tesla? Or telling Papa Elon to hit the road? This is your quick stock analysis. For transparency's sake, Tesla is actually our largest individual stakeholder position, only behind our Vanguard Index Fund, ticker VIG, as our total largest position. Between our two accounts, we have a total of 200 shares of Tesla, representing a whopping $75,000 in profit. With this in mind, take into consideration we may hold a bias. However, just as with all of our other quick stock analyses, we will try to remain as impartial as possible. Let's rack up some dislikes. Considering Tesla is the most popular stock here on YouTube and pretty much every social media platform, I want y'all to take into consideration a lot of influencers hyping up Tesla are making money by pushing Tesla hype and get rich quick videos. Regardless of what happens to Tesla share price, they've already cashed in merely by hyping up the company. Share price goes down, they make a video. Share price goes up, they make a video. But pump the brakes. I'm certainly not talking about all the influencers. There's some genuine people. I think Hyperchange, Financial Education, definitely Josh from Stock Market Live. There's some Class A characters. Disclaimer, I'm not recommending their investing strategy. I'm just speaking my truth. It doesn't necessarily need to align with yours. Simply put, what I'm getting at is, as always, you gotta do your own research. But enough rambling, let's get into your quick stock analysis. Quickly hitting on Tesla news from the previous week. No, Tesla did not get included into the S&P 500, even though much smaller companies like Etsy, whose stock market value is less than a 20th of Tesla, was included into the S&P 500, which many bears argue is due to the company's volatility and sky-high valuation. Moving on, Tesla announced a capital raise of up to $5 billion worth of shares, which made up about 1% of the company's total valuation at the time of the announcement. Obviously, slightly more after its recent correction. This capital raise is going to be used for the company's debts and future funding. And finally, in regards to the share split, like we mentioned, Tesla did a 5-to-1 split, which, at least for the short term, drove some crazy hype to the company, which in all honesty I didn't think was even possible to add more hype to Tesla. Regardless, at least initially, the ability for investors to become a shareholder for $500 compared to a few thousand caused a crazy pump that lasted a few days. Slightly off topic, but the government gave a bunch of stimulus money to people, and who would have guessed they would exchange their refund and unemployment benefits for good old Muskbucks or Tesla shares, and that's the beauty of the hype surrounding the company. For a lot of Tesla investors, valuations mean nothing. Simply put, there are a ton of people investing Tesla that won't let go of their shares regardless of how high the price goes. 1,000% gains in a year? Psh! We're riding our single share to $1 million. But for real though, in regards to the top 10 stockholders of Tesla, excluding Papa Elon, it looks like a majority of them have been taking some gains, with Goldman Sachs selling 677,000 shares, JP Morgan Investments Management selling 291,000, Jensen's Associates selling 451,000, and Tesla's largest outside shareholder, Bailey Gifford, selling 3.8 million shares, which certainly could have had something to do with the correction we have been seeing. One could certainly argue this sell-off is a rebalance of portfolios, as after Tesla's massive run-up, it's easy to imagine Tesla becoming too large of a position within their portfolios, requiring a rebalance. It's something interesting to consider nonetheless. Anyways, let's take a look at the company's products, starting with their cars. Tesla delivered 90,000 cars in Q2 2020, 88,000 in Q1, 112,000 in Q4 2019, and 97,000 in Q3 2019. Just to put this into perspective, in Q2 2020, Toyota sold just shy of 400,000 cars, more than the total Tesla delivered in the last 4 quarters. And of course, depending on the day, Tesla is valued at roughly 2x that of Toyota. Clearly, investors are not merely looking at how many cars Tesla can sell, at least currently. And yes, I could circle us back to the fact that electric vehicles are the future. Sure, the initial cost of EV vehicles are more expensive, but it's made up in regards to the cost of operation, or the fact that electricity is far cheaper, and in theory, EVs require less maintenance. But let's be real, you've heard it all before. But can these facts really be the reason Tesla just a few days ago was over a $500 billion company? Well, no. It must be the Tesla Semi. Of course, the consumer car market isn't the only market on Tesla's radar, as mass production for the Tesla Semi is planned to start sometime next year. As we've taken a deep dive into some other up-and-comers in the big rig market, I'd quickly like to compare how Tesla stacks up. First, we have competitors working on hydrogen fuel cells like Nikola. To state the bull case, hydrogen fuel cells can be completely renewable with zero emissions. After H2 and O2 combined, it only creates water. And yes, hydrogen is the most abundant element in the universe, but for the most part, it's already bonded to other elements. Meaning, in order to utilize it as a fuel source, it still needs to be processed. This can be done through the use of traditional power plants powered by natural gas, but this would mitigate the benefits of fuel cells, at least from an environmental standpoint. And yes, Nikola Bulls, I'm not going to go into electrolysis here, link in the description if you want to check it out. Along with this, the ecosystem for hydrogen fuel cells isn't where it needs to be. Financially speaking, to make hydrogen fuel cells cost-effective for fleet owners, they need to be built out. Massive hydrogen fuel cell recharging plants en route. It's not going to be as simple to transport it as gas or electricity. Remember, hydrogen is the simplest and lightest element, which makes storing it safely difficult, as you need extremely high pressures to convert it from a gaseous state to a liquid. And along with this, just like electric vehicles, hydrogen fuel cells need a switch from AC to DC. These factors make it expensive to transport, and these transport costs directly correlates to the discrepancy in prices based on the location you fill up at. Filling up on hydrogen within the city limits is going to cost you much more when compared to gasoline and electricity. However, before we rattle even more of you, we should quickly note the bull case for Nikola. Remember, big rigs can only weigh 80,000 pounds, and hydrogen fuel cells weigh substantially less than large batteries. Meaning hydrogen fuel cell tech can transport cargo nearly twice as far as what the Tesla Semi will be capable of. And to quickly wrap up, upcoming competitors in the big rig market, you also have Hyliion, who, at least in the short term, could actually offer some competition. Hyliion is currently a leader in electrified powertrain solutions for commercial vehicles. Along with this, Hyliion helps create efficient systems that are able to integrate with existing vehicles, aiding customers in decreasing their fuel consumption and expenses. Anyways, I'll leave a link in the description if you want to check out the full Hyliion analysis, but it seems as if I'm getting off topic once again. Let's quickly wrap up Tesla's semis. Realistically, the biggest player in Class 8 truck manufacturers in the US is Freightliner with a 36.5% share of the market. And yet, their market cap is only $55 billion. And consider the company does far more than just big rigs, such as their Mercedes-Benz cars, just as an example. So yes, it certainly does offer an amazing market for Tesla to tap into, but it certainly still brings us shy of that $500 billion market cap. Alright, maybe it has more to do with than the company's ability to manufacture vehicles, and more so to do with their tech, such as autonomy. I can get behind that idea, or merely the fact of eliminating mindless tasks such as driving, freeing up human time to work on more meaningful tasks. Or maybe the fact autonomous cars will change the taxi and busing industry. All of this sounds great, and don't get it twisted, Tesla is going to be a massive player in the autonomous car market. However, an investor should take into consideration semiconductors like Nvidia are working on making these chips a relative commodity. Any car manufacturer can buy a full self-driving system or chip from a company like Nvidia. I don't know if you've seen Nvidia's partnership with Mercedes-Benz, but they have some cool things in the making. I'll leave a link in the description along with our complete analysis of Nvidia, and yes, there certainly is an advantage to Tesla if they can continue to successfully create their own proprietary chips, but don't think Tesla is going to be a complete monopoly within this market. Alright, once again, that's a huge catalyst for Tesla, but does that justify that $500 billion market cap? That's still pushing it. Well then, it must be Tesla's battery tech, which could hold some merit. As the world's largest EV battery maker, contemporary Amperex Technology, ticker CATL, has a market cap of $475 billion. The thing is, Tesla is working on some amazing battery tech, including the Power Pack, which is a grid battery that can produce electric energy to a home, or even take an entire interconnected ecosystem entirely off the grid. Of course, they also offer in-home powered solar batteries, which is an absolutely huge market, as the goal for home and grid energy is to reduce costs through stored energy. Home and grid costs can be significantly reduced when stored energy is used. However, Tesla has struggled with this in the past. Manufacturing and installation costs still make the implementation costs high, which requires longevity for an actual return on investment. And to quickly mention it, many Tesla investors are hyping up Tesla's Battery Day, which is just right around the corner. Once again, this just scratches the surface. At this point, I'm sure many investors are starting to argue for that $500 billion market cap. Well, let's add some icing to the cake and quickly hit some key highlights. Of course, we have Tesla Insurance, Taxi Network, software, oh, and of course, their global takeover with the Gigafactory in China, and soon to be Gigafactory in Texas to produce the good old Cybertruck, or Gigafactory 4 in Germany that will be assembling Tesla's Model Y. All of these segments alone offer huge catalysts for Tesla. And I'll leave some links in the description as this video is getting long and I'd like to wrap it up. So with all of this in mind, what's our move? The thing is, it's not a single segment that has brought the rise of Tesla. It is a combination of all these massive segments making Tesla the behemoth it has become. However, in your humble reporter's opinion, as with every other video we've made this week, if you're looking for a high growth spec play, Teladoc and more so OnTrack may offer more upside, and I would argue even less short-term risk when compared to Tesla. Let's keep it going and rack up some more dislikes. Remember, as I say this, Tesla makes up a decent size of our total quick stock long-term portfolio. But quoting Papa Elon, in my opinion, Tesla is still overpriced. Hell no, to the no. Granted, it's looking a lot more attractive at under a $400 billion market cap. But in all good consciousness, here at Quick Stocks, we can't recommend people get in at these crazy levels, unless they can stomach this insane volatility. However, it might be hypocritical, but regarding our Quick Stocks long-term portfolio, we have absolutely no interest in selling any more of our shares, considering we've already taken massive profits and all of our shares are more than paid for. Realistically, I could see Tesla becoming a $1 trillion company in the next 5 years, representing an easy 2x at its current prices. But this is a long-term position. When it moves big. In the short term, I could also see Tesla rebound to previous highs or retreat back to a $200 billion market cap, which as a long-term investor, it would be cool to be able to buy Tesla at a more reasonable valuation. It's just, I know how hard most of you work for your money, and like I said, as much as I would love to, in good consciousness, I can't tell you to dump all your cash into Tesla. It really is poor advice and sets you up on poor foundation as a long-term investor. However, take into consideration this comes from someone whose largest position merely tracks an index. What do I know? However, I do want to quickly end with the fact that how many companies can you invest in and feel like your money is going towards something that is actually making the world a better place? As a singular example, EVs aren't perfect. Currently, the manufacturing of lithium-ion batteries is less than desirable, but for many people, it's a step in the right direction. However, take into consideration, we are certainly not a financial advisor. Please do not buy or sell shares because you saw it purchased or sold here on Quick Stocks. But anyways, guys, that's all we've got for today. As always, the best investment you can make is to go long on Quick Stocks. Hit that subscribe button now at 1,550 subscribers and plan an early retirement. I will catch you guys in the next one.